Hey everybody, Average Gamer here. Welcome to just a quick little video where I wanted to go over, I think it's maybe 15 or so, or at least 5, sorry, kind of stock market myths. Myths about, investing in your retirement and things like that. The first one is, that it's like gambling. No, it's not. If you do your proper research and things like that, it's not. If you don't do research and just look at a stock and see that it's going up and go, I could buy that, I can make money, that's gambling. Whereas if you look at companies, look at their history, look at their stock history, and things like that, it's not so much. You can actually really gauge your own, how can I put it, um, risk. Like for example, if you look at my stocks here, for example, we're going to select them. I got 50 stocks. Some of them are more riskier than others, while other ones are not. Some stocks, like you'll notice on I've got a 90-day chart and a 10-day chart. Notice that some of them, yeah, they bounce around all over the place. They're all over. Those to me are high risk stocks. When doing my homework on them, I look at them and go, okay, well, this is something that's interesting, but there's a 50-50 chance I'm going to lose money on it or I'm going to gain money on it. A lot of these stocks I'm looking at breaking even on the stock price because of the way it kind of goes, like if you look at this one here, for example, AFCC, Automotive FICO Corp. Overall, it pretty much stays generally the same, but it has these massive peaks and valleys. You know what? It's not the best if you're trying to buy a stock and then sell it for a profit. What I'm looking at doing is buying the stock, making money off the dividends, and then if I sell the stock to hopefully, fingers crossed, sell it for maybe $5-10 extra. I'm not looking for like thousands of dollars, hundreds of dollars. I'm looking for maybe $20. If I can make $20 off a stock, that's good for me because the way I look at it is I get my monthly amount from them every month, and that's where I get my return. I'm not looking at making tons of money off the stock price as much as I'm looking to make money off the dividend itself. Yeah, it'd be nice to be able to sell a bunch of stock here and there, but for me, that's the more gambling part of it. For me, gambling is buying a stock just for the stock price to make money off the stock price. Even major companies like GE and P&G and all that stuff, they'll have their fluctuations. Those companies are just a constant slow uptick. Like, yeah, they might go up or down a couple bucks in a day. And if you want to buy and sell stock just for that price, then that's where the gambling part comes in. But if you're buying it for the long haul, where you're like, I'm not too worried about the stock price as much as I'm hoping that it stays within a nice little threshold of a couple bucks, like even a couple cents, to be honest with you, within the original price I bought it, so that by the time the dividend pays out and I've had enough of that and I sell it, it would be nice to make a little money off the stock price, but in the end I'm making a lot of money off of the dividend, which will offset a lot of things. Number 2, I got a little spreadsheet on the side here. The stock market is exclusively for stockbrokers and rich people. No, it's not. If you got $100, there you go. You can turn that $100 into $105, but you can turn that money into something. You don't need to have a university degree and be working on Bay Street or Wall Street in the States. If you do your own homework, you do your own work, you can do good. You can actually make money, retire. The tools that used to be available to these massive companies and corporations are now available to almost everybody. There's free tools all over the place. There's like Questrade. Almost every bank now has the ability to give you access to these tools so you can evaluate a stock for you personally and you can make your decisions, and a very educated one. Well, before you pretty much had to go into a place and talk to a person, or open up a mutual fund and then have someone else buying and selling stock for you. And that person would get rich and you wouldn't. But instead, now you and I, the average person, can drop $100, drop $200. If you give me a moment here, I opened up an alternative little thing here real quick. So during the week, I opened up another little thing just to show you. $500 invested on Friday. Here you go. Thursday. Invested in Thursday. So started with $500. Started with $434. Bought some stocks. You can see the changes in the prices and all that stuff. And yeah, technically the market value is down. Yeah, technically you're at $65. That $65 though is including the $9.99 that it cost to buy the stock. Now, yeah, you're down $65. But I did it. I did an investment. I'm making $3 a month. Cool, right? Like, yeah, you're making money right there. Yes, you might be losing money today. Not losing money tomorrow. Tomorrow, the stock might bounce back and all of a sudden, boom, now all your market values are higher. But if you do proper research and proper evaluations of the stuff that you have a really good chance of doing well. Now, you don't need tons of money to make tons of money. With proper research and proper thought and proper evaluation, and obviously a risk to yourself, whether you want high risk, medium risk, or low risk, you can do pretty good. You're not going to make millions your first day. You're not going to make millions in your first couple of years. You may not even make millions. You may make tens of dollars, sixes of dollars. I mean, we're making $3.32. Oh wow. Like, it's not that crazy. And then here, obviously, in mine that I've been going on for a while, I'm making $434. It's really not much. That's not even a paycheck for work, really, when you think about it. Over time, you build that up, right? You slowly work on it and you slowly get things going over time. And that's the thing, right? That's what you want to do. You want to build things up over time. You don't need to drop, $800 million or $80 million on a specific stock. Let it go up 10 cents and then sell it. Think of things long term, and think things 4 years down the road, 6 years down the road, 8 years down the road. Think long term, not short term when it comes to a lot of this stuff. Some people will buy a stock and hold it and watch it, and then they'll see something like this right here, like Enbridge on Friday. It dropped 37 cents. Oh my God. The big adage, right? When you play the stock market, you buy high, sell low. If you aren't educated, you make uneducated decisions. And it has nothing to do with money that you start with. It all has to do with your own research and your own work. The next one is the fallen stock will go back up eventually. This is what I like to call the battle cry for dollar cost averagers, because they want to buy that stock as it goes down, because when it goes up later, they'll make tons of money. Well, the stocks always don't go up, or don't go down, or never come back up. Some companies I've watched since COVID started, they crashed. They're gone. They're done. Not so much like the fact that the stock went from like $30-$40 down to like 30 or 40 cents, and it sure as hell ain't coming back up. Like, you can see a lot of these companies are being sold off. They're being bought up by other companies and split and then resold. In the end, just because a stock goes down doesn't mean it's going to go back up. Just because a stock goes up doesn't mean it's going to go down. Best example are companies like P&G. that company, their stock over the last 80 years has just gone up. Now, yes, it's had little downs here and there, but it just goes up. Um, Companies, I think it's Brookfield and Equities or something like that. One of the big equity companies. It just goes up. Like it went up like I think it was like 300,000 in a year. Um, you know what? Sometimes a stock's going to go down and it ain't coming back up. So always do your homework. That's the main thing. Always do homework. Oh, the next one, like I said, stocks go up, have to go down. So some people, like when they do, can't remember what it's called, but basically you're buying a stock with the clear indication that it will go down, and that's where you make your money. No, that's not the case. It's Berkshire Hathaway. That's what it was. In 1 year, it went up $10,000 per stock. So everyone's like, well, it's going to go down. Over the next 5 years, it went up 300,000. Just because it's going up doesn't mean it's going to go down. Just because it's going down doesn't mean it's going to go up. The other one is, if you know a little, it's better than knowing nothing. This one is, kind of hit or miss. Yeah, if you know nothing and just picking stocks at random, then yeah, that's bad, right? If you just pick a random stock, drop $100 in it, $400, $50,000, then yeah, you're gonna get bit. But at the same time, if you know a little bit, like how stocks work, what's going on in the economy at the time, and a specific company, that's not so bad. But the more time you do your research, the more you get to know a company, what they're doing, what's going on in the world, things like that. More knowledge is more power. And that's pretty much it. It all comes down to knowledge. Not jumping into things, not assuming, not buying into the classic, well, what goes up must come down, what goes down must come up. It's all about a company. You're doing your research on that company, looking in that company, figuring out what that company is. Some companies you can even reach out to them, and usually they have a PR person, and you can ask that person a bunch of questions. Tell them, hey, listen, here's the deal. I'm planning on buying a bunch of your stock on the internet or on the TSX. I have a bunch of questions about your company. I see that there's a lot of stock available, so depending on your question, I may or may not buy a bunch. And here are my questions. And most companies will answer those questions. The PR person, if they don't know the answers, they'll get back to you. Like, hey, here's the deal. I'm looking at all this information. I'm an investor. Looking at some stuff. I've been looking at your financials, because every company that's traded makes their financials available to you. There's certain things on your financials that I have some questions about. Would you be willing to answer them? And some will answer you, some will ignore you, some will say no and just refer you back to their report. No, knowledge is power. In this case, knowledge is money too. The less you know, the less you make. The more you know, the more you make. And also with the knowledge of none of this is guaranteed. Don't expect it to be guaranteed. I'm putting money aside for my retirement. I'm hoping it pays off. I'm hoping that I forget later, or don't forget later, to turn my screenshot or my my screensaver off. But yeah, I can't stress it enough. This is not guaranteed. That's why I personally only do maybe maybe $100 a month. Put it aside. buy some investments, and hope I make the right decisions, the right educated decisions. Do my homework, and be like, okay, this is what I'm doing. This is what I'm gonna do. I'm gonna, hopefully have something to retire with, and we'll see. I mean, I have a personal goal of $3,000. Once I hit $3,000, that's my goal for retirement is $3,000 a month. If I can hit $3,000 a month, and I don't have to worry too much about bills at that point, I don't have to worry about much. Because after taxes, I'll have like $2,700. So, yeah, we'll see. Anyways, thanks for watching. I hope this kind of alleviated some people's worry. Honestly, if you don't feel comfortable doing it, don't do it. If you're like, I could throw $50 here, I could throw $100 there. Theoretically, you may not get that money back. So always think of that. Whenever you put that money in there, it may not be coming back to you. So thanks for watching. See you next time. Bye-bye.